What's going on, Mr. Matt?
How are you, Ken?
Hey, man, pretty good.
Good. Long time no talk.
I know. It's been a while. You staying coronavirus free?
Trying to.
Excellent. Excellent. Have you been out to a restaurant yet to eat?
Yes, as a matter of fact, my wife and I hit up Bob's the other night for an anniversary dinner.
Oh, very nice. Just in time for the anniversary.
Yes. Yeah. But other than that, no, we really haven't been doing much. What about
Yeah,
you
I know
guys?
most people are. Yeah, I know. Same type of situation. Everybody is just kind of holding tight. So,
You been traveling at all?
No, not yet, but we have started meeting with a lot of people in person.
Yeah.
So that's been good. It's been like, hey, I like that better than Zoom. Zoom's great, right? It's better than just a phone call.
Right.
But it's great to meet with people face to face. Went to Corner Bakery yesterday and then had a lunch meeting at Saltgrass. So yeah, it's nice to get rolling with that.
Yeah. Yeah. I was surprised how many clients still wanted the face-to-face.
Yeah, absolutely. I don't know. It's nice to get that interaction.
Right.
It really is. So it's a good thing. And then, with school being canceled and at home, and now it's summer and all kind of stuff. So
to think about
good things are happening.
the options. I think one and two, the strong and the medium options, because quite honestly, I don't think that just let's say
Right.
involving each other in any kind of potential business that comes along. I don't think that is really a very
All right,
efficient.
we are going to get started here in just a minute.
Yeah.
We will get cranked up. We'll just wait. Well, we are at the 2-minute mark, so we are going to go ahead and get started here. I hope everybody has been staying away from the coronavirus and y'all are free from that. A lot of things happening in our country, isn't it? It's really wild what's happening. But I'm glad that we're able to meet a little bit today and gather together. I've muted everybody for now. And if you have a question during our webinar, please just use the chat feature and we'd be happy to answer that along the way. What I want to do, first off, is to give everybody an idea of kind of what is captive insurance in 90 seconds, right? What is something that, what in 90 seconds, can we explain what captive insurance is? So here's what it is. It is a private insurance company owned by the business owner, all right? It is owned by the business owner. So think of it, you have a business here, all right? The business is going great. They formed their own private insurance company. They are going to cover unique things for that business that they're currently not getting coverage on with their commercial insurance company. The company is going to pay their own insurance company those premiums. They deduct those premiums from their books. The money comes to the captive insurance company. And then that money is tax exempt. They then can use that money to invest it or do whatever. So a captive insurance company accomplishes 3 different things. It will protect the business. It will decrease taxes, and it will build wealth. And so what I'm going to do is share my screen with everybody, and we're going to go over some slides just to kind of get an idea of some more details of what I'm talking about. So I am a CPA. I specialize in captive insurance, right? We create and manage captive insurance companies for business owners. That's our main thing. Private insurance company owned by the business owner. It's the premier risk strategy and risk management tool available today. You can't get any better than a captive insurance company as far as the efficiency of it. Who is a captive for? Get this question all the time. You may be like, well, who in the world could this be used for? It's any company, because any company has risk. Okay, so any type of business can benefit. Is there revenue somewhere between 2 million and 2 billion? If so, that is a company you want to look at to see, does it make sense for them to do a captive insurance company? Now I'm talking gross revenue. I'm not talking net profit. You know, do they have gross revenue of all their businesses, total sales of 2 million to 2 billion? It's something you should look into. And then you have, it will allow you to, all the different kinds of industries, right? Physicians, manufacturers, construction. It works for any type of industry because everybody has risk, all right? So what does it do? It protects the business, decreases taxes, and builds wealth. How does it protect the business? It's integrating your traditional commercial insurance, all right? So you do not drop your commercial insurance. You're not replacing that. You're simply adding to it. Now think of it. When you get your commercial insurance policies, y'all, do you remember there's like 1 page of what's covered and 300 pages of what's not covered, right? It's a huge thick deal. Well, those are the things that captive insurance covers, right? It covers your gaps, exclusions, deductibles, business risk. It covers all those. Now you still have your commercial coverage, right? But this is going to cover even more. Now, what are the types of things that it covers? Well, we've had a couple of things happen over the last little bit, haven't we? Look at number 3 here, coronavirus pandemics. If people had a captive insurance company, let's say a restaurant, you know, they closed them like for 2 months. Let's say they had $500,000 in sales a month until coronavirus. If they had a captive, they closed for 2 months, they could get a check for $1 million. Their commercial insurance company is not going to provide them that, right? Because it's an exclusion typically in commercial policies. Business interruption insurance. Maybe they do construction in front of your business. It causes a loss of sales. What about ransomware? Cyber risk. Is that a problem today? Absolutely. Employment practice liability. Loss of a key client or contract. There's lots of businesses that maybe they have 3 clients that make up 80% of their revenue. And if they were to lose one of those, it would make the company less valuable and put a tremendous strain on the company. You can ensure that if that client leaves for a competitor or whatever, goes out of business, you can get a check to make up your lost revenue from that client. Now that's value, y'all. That's a lot of value. Or you have a key employee that mainly runs everything, all right? Ensure that they don't leave. Or a key supplier, they're half as much as the competition. If they went out of business or something happened to them, it would hurt your profit margin. You ensure that if that happens, you're going to get a check to cover the difference between who your current supplier, the cost of your current supplier, and your new one. Regulatory change, how about that? Oh my goodness, you think there's some regulatory changes coming? Yeah, coronavirus. The sanitization market's going crazy. The plexiglass market, it's going through the roof, right? Got to have it at the grocery store. Here's another one, rental income replacement. Let's say you have some commercial real estate, you know, and you're renting that out and somebody skips out on you, you know. You checked them out, you thought they were good, but they skipped out on you. You can claim up to 6 months worth of losses and get paid from the captive insurance company. So there's like 1,000 different policies out there. And they typically cover low frequency, high severity risk. So it protects your business. It's creditor proof, right? So somebody might be able to sue the primary business, get to the assets there or them personally, but nobody can get to the captive insurance company because it's an insurance company. And there's a law that says you cannot force the liquidation of an insurance company. So your money is safe in there. So that's a huge deal because who knows what happens, right? Now, here's the other thing that's very, very popular. CPAs love this, advisors love this, business owners love this, right? It decreases your taxes. What am I talking about? Okay. You get to deduct a full line deduction, and I'm just going to use $1 million example, okay? If I had $1 million left over at the end of the year, a profit, if I do nothing, how much am I paying in taxes? $400,000, right? If you're in the highest tax bracket, 40%. Or I could form a captive, get all kind of insurance coverage for my business, which is the primary purpose of a captive insurance company. Move that money comes over, the premiums come over your captive insurance company, and there's a special exemption where you can exempt that income. You may be thinking, wait a minute, I just deducted it from my primary business. And you're saying the income that comes over here to the captive insurance company, I do not have to count as income? That's exactly right. There's a special exemption that allows you to do that. So you get to keep all the premiums that are in there. So the tax strategy behind that is tremendous. CPAs love it. Now, a lot of people are like, well, how in the world do I get money out of the captive? Is it stuck in there forever? It's not. You can start taking money out around year 2, and those are counted as qualified dividends. So you're going to be taxed on that at somewhere between 15 to 20%, right? So, but remember, if you're an S Corp or LLC, you deducted it at ordinary income rates of up to 40% plus if you live in other states. And you're only paying when you pull money out 15 to 20%. Now, that's a lot of tax savings. And it's a lot of insurance coverage for your business. And you have an opportunity to reduce your commercial insurance costs. I think I've got a slide in here that talks a little bit about that. We had an example of a construction company that had all their sales were 2.5 million, or all their insurance costs were $2.5 million. Well, they formed a captive insurance company. And when they did that, they were able to increase their deductible, which drove down their premium by $1 million. And so they saved $1 million a year. So tremendous value, y'all, tremendous value. I have this slide here because I want you to see what's the difference between if you have a captive or if you don't have a captive. I gave you the $1 million example. You pay your taxes. If you're in a state that has state income, you're looking at maybe 45%. You're net $550. Or that money can go into the captive insurance company. You're going to get millions of dollars worth of coverage. It's not a dollar for dollar deal. Like in this instance, $1 million worth of coverage will probably get you somewhere between $10 to $30 million worth of insurance coverage, right? You do have management and operating expenses of around $50 for $1 million. This ranges. If it's a smaller one, if you're only putting in 100, 200,000, it's a lot less. If you're putting in 2 million, it's a little bit more, but it's around 50. Then you have reinsurance. Everything is completely reinsured. But then you have investment income of probably 50, because remember, you get to invest those premiums. So you end up with 980. Well, which is more? Which would you rather have, 550 or 980? So that's $430,000 difference. And you protect that business you spent 30 to 40 years developing. So the benefits are tremendous. Here's that company where I said they saved $1.5 million. But here's another, the third thing that it does is that it builds wealth. Okay, you're retaining these premium dollars. If you write a check to State Farm or CNA or whatever, you're never seeing that money again, right? I mean, you are not seeing it. It is gone for good. But all the premiums that you write a check from your business over to your captive insurance company, you retain all those premiums. You keep them all. Why? You own the insurance company. And so you're able to retain all those premiums. The premiums are investable. What are they investable in? Wall Street funds, mutual funds, ETFs, stuff like that. You can invest in those. But here's another big deal. They're all reinsured. All the policies that you have on the business are reinsured. So that if something happens, I'm not coming out of my captive insurance company dollar for dollar. We reinsure that and pull from the reinsurance to pay the claim. And you may be thinking, oh my goodness, what the hell in the world? What does that cost? It's cheap, y'all. It's like 2 to 3 cents on the dollar to reinsure things. It's very cheap. So it's tremendous. Here's another great thing I love about captives. Captives can actually be a profit center. I mean, how many of your clients produce something? When you go to Best Buy or whatever and you buy a TV, what's the last thing they ask you? Hey, do you want a warranty on this? For an extra $50, you can put a warranty on this. It'll last 5 years or whatever. And you're thinking, well, I've already spent $1,000. Okay, what's $50? Exactly. Any one of your clients can do exactly the same thing if they manufacture or produce something. Let's say for whatever they produce, the insurance or warranty is $500. Guess where that $500 goes? It goes directly into the captive insurance company with a tax rate of 0. Did you just bring tremendous value to your client? Oh, yeah. You just created a whole new profit line for them. How much did it cost? A piece of paper. Unbelievable value. And then the money goes into the captive tax exempt. We had a commercial range company come to us and say, hey, everybody offers a 1-year warranty on these commercial ranges. Can I offer a 2-year warranty? We said, sure, go ahead. You can do that. They offered a 2-year warranty. Guess what happened to their sales? Boom, shot up through the roof. They're leaving their competitors behind. Why? If I'm going to go spend 20 grand on a commercial range, I want it to last longer than 1 year. Are you with me? So it lasts 2 years. Hey, that makes the difference, right? And so businesses are able to increase their primary sales through offering a warranty. You can either charge for it or not charge it, but it's really reasonable loan to do a captive. New profit lines, competitive advantage, and it works for any product or service. And then you cover your risk and exposure through reinsurance. Going back to this example here, we have the business $1 million. If you pay your tax, you have $550. With a captive, you end up with $980. All cost in. I don't like. Let's look at the whole picture. What is this really gonna come down to? You're looking at $980 is what you're gonna have. Okay, so $430,000. If you do that over a 5-year period, look at the difference. You have $2.5 million difference. Over a 10-year period, over $6 million difference. And you have millions of dollars protecting that business. Custom coverage that they can't get anywhere else. Look at the difference. If you didn't have a captive, you would have $5.5 million left, and it's completely unprotected, right? Or if you had a captive, you would have $12 million, which is protected and investable. Y'all, that's a savings. You saved $4.5 million in taxes. Is that not great? So you are $6.5 million ahead. So any business that is thinking about selling within the next 2 to 5 years too, I just yesterday met with somebody that's their business, increasing the value and then getting people ready to sell. They love this because now they're able to solidify that business so that nothing is going to happen to it over the next 2 to 5 years. Then they can sell it for full price. So y'all, this is a way to bring value to your clients, protect them. Captive formation steps. It's easy to form a captive. We've made that easy for you. The feasibility. This is a cost-benefit analysis, y'all. As a CPA, I want to make sure, does this make financial sense for them to do? So we do a cost-benefit analysis. The next step, if they like that, then you go into underwriting. That's where we get a third-party independent actuary to look at the business. They're going to say you have this amount of risk, and to cover that risk are these 15 different policies, and they add up to, let's say, $1 million. Now, they don't have to put in $1 million. They may choose to put in 200,000 or 100. Okay, but they could put up to $1 million. Okay, you can only put in as much as the underwriter says. Then there's the formation stage. That is where we form the corporation. All these are C corporations. We obtain the insurance license for the business, and then the management. This is the ongoing annual task. There has to be, actuary has to look at it every single year. We communicate with the state insurance department because you have a true licensed insurance company. So we manage all aspects of the captive for the business owner. They don't have to hire anybody else. It's a complete turnkey deal. We provide them all kind of financials, everything that they need. Formation time, 30 days or less. That's it. That's all it usually takes. It depends on how quickly we can get the information from people, as far as how quickly we can get things formed. Remember, a captive is a true insurance company. The operations have to be for risk management purposes. All the policies are actuarially supported. Third-party actuary, independent, not us. They say what kind of risk you have and what the premiums are going to be for that. Capitalization, any corporation has to be capitalized one time. And then pay close attention to this, risk transfer and risk distribution. You have to do risk transfer and risk distribution. It's critically important. In exchange, you get the reinsurance part of it, right? But we handle all the risk distribution part of it, so you don't have to worry about it. But we'll go into more detail on that in other meetings, not today. So captive insurance, it's going to protect your business. It's going to decrease your taxes. It's going to build your wealth. So do you have a client in mind? You think, I wonder if this would work for them. Hey, give us a call, email us. We'll run a complementary analysis and see what's the cost benefit related to it. So what I want to do now is maybe look at the chat box, see if we have any questions in there, and run a poll here. Well, we're not going to run a poll. But I'll tell you, so I'll tell you some questions people usually ask. Can you have more than one captive? You can. You can have more than one captive. You just have to have a good business reason for it. But you can have more than one captive. And then also, why doesn't everybody do this? That's a very, it's a very common. People are like, hey, why doesn't everybody do this? You know, a lot of people just don't know about it. Bottom line, they just flat out don't know about 90% of your Fortune 500 companies have these. And so we're bringing those to the small to mid-sized market. So I hope that you've enjoyed our webinar today. I want you to give me a call if you have any questions regarding it. And we'd be happy to run, just to talk about it more. Maybe you have different questions about it, or you want to run a potential client by us. How much money is tax exempt going into the captive? That's a great question. We got a question from that. How much money is going tax exempt into the captive? 100%. So if you have a small captive, up to $2.3 million per year. So you could transfer up to $2.3 million into the captive per year, and it's tax exempt. So you get a full business line deduction for the business, and then the $2.3 million is tax exempt for the captive. So yeah, it's a phenomenal strategy when you look at the tax aspect of it, but it's a business risk deal, and so it tends to make a lot of sense for business owners. So, but that is a common question. Well, how in the world does this exist? How does this work? It's because you're an insurance company, right? A private insurance company. Nobody else knows you're an insurance company. You're not writing insurance for other people, okay? You're not writing it for other business or anything like that. So it is just for you and for your business. So if anybody else has any other questions, please give me a call or email me, and we'd be happy to work with you or to see if a client, if it's good for them, or how you can incorporate this into your business, whether you're a CPA, a financial advisor, a lawyer, commercial insurance. This is a good way to bring additional value to your client. Hey, I enjoyed it, everybody. Give me a call anytime. We'll see you next time.